Hello, I'm John Caduce, Head of Products and Product Strategy here at AAIS. As a member-based association, we take strategic direction from our members regarding investments we make in program and service development. We also serve the regulatory community with whom we have a unique and important relationship. Those relationships have helped us create meaningful new products and modern technology solutions like the OpenIDL platform for regulatory reporting and advances in machine learning and AI to improve the compliance process. On occasion, we are asked by regulators to solve a particular problem for an emerging risk, like the growing cannabis market. Whether you are for or against the legalization of cannabis, more and more state legislatures are legalizing medical and recreational use, creating a whole new industry with unique risks and exposures. In 2018, we were approached by the California Department of Insurance to develop policy language for qualifying cannabis companies. So we did. In fact, our Cannabis policy form is the first of its kind in the market, and we're proud to now have a program approved in California, Colorado, and Nevada, and we're seeking approval in numerous other states as the laws and risks evolve. It's important for carriers to stay current on the issues in this market as they develop. That's why we've assembled a terrific panel of leading experts to join us today to discuss the growing cannabis market and the insurance industry's response. In our next session, you'll hear from Randi Ellias, a partner in the global law firm of Porter, Wright, Morris, and Arthur, and chair of the Excess, Surplus Lines, and Reinsurance Committee of the American Bar Association. She'll be joined by Rich Golz, a lead risk consultant in Aon's Cannabis and Hemp Resource Group, and our own Phil Skaggs, assistant counsel and one of the architects of Cannabis. So now I'd like to hand over the reins to our moderator, Joe Jonas, Commercial Lines Product Manager at AAIS, who will take us into the weeds of the cannabis market. Joe?
John, thanks for the introduction. And I want to reiterate that we really are privileged to have such strong panelists here that truly represent a cross-section of the industry. But before we can dive into the subject matter, I'm of course obligated to provide our legal disclaimer. So cannabis is a sticky subject, which is why the opinions expressed during this presentation are for informational purposes only and solely those of the presenters. They should not be construed as legal or professional advice or the official position of AAIS, its members, partners, or sponsors. So now that the formalities are out of the way, I'd love to jump right in because we really have a lot of content to cover. So I'd actually like to start the panel discussion off with two pressing issues right now, politics and the pandemics. I promise I won't hit the trifecta with a question on religion. But seriously, taking aside any personal political leanings, where are we now in terms of legislation at the federal level? And if we are potentially looking at a regime change, what does that mean for cannabis? And I'd love to start with one of our guests first. Randi, if you could kick us off.
Sure, I'm happy to, and thanks for having me. So in terms of a regime change, right now, based on what we're seeing out of the Democratic platform, I don't know that we're going to see a sea change in what the legislation looks like. Right now, what Biden-Harris seems to be supporting is a decriminalization of marijuana, which is different from a legalization of marijuana. In terms of decriminalization, usually relates to personal use, personal possession, those types of things. Doesn't remove cannabis from Schedule I of the Controlled Substances Act. So all of the anti-money laundering statutes that prohibit unlawful financial transactions relating to unlawful activity would still apply, and all of the same federal statutes relating to banking, relating to the insurance industry really wouldn't be impacted, at least not with what the platform currently stands.
Rich, any thoughts?
Absolutely. I think that's a great point, Randi. Any federal action that either legalizes cannabis or specifically protects financial institutions serving the cannabis industry, I think would certainly make a big difference in terms of access to banking, participation in insurance. I'm not sure we're seeing anything like that in the current Democratic platform. The one caveat that I'd add there is that any sort of action would need to be very, very clear in terms of how it relates to state law for a strong impact on the insurance industry to be felt. If we look at kind of the U.S. hemp and CBD industry at the moment, there is still an enormous lack of capacity and participation by the largest admitted insurers, really as a result of the incongruity between federal guidance and state law around CBD. So despite the Farm Bill making it legal, really still not seeing a lot of participation. So any sort of action in order for it to have a large impact on the insurance industry, I think would need to be very, very clear.
Phil, any further thoughts that kind of round out the answers here?
Sure. Yeah, I will note that we are looking at 4 kind of major contenders, bills that are kind of winding their way through committees and from the House and the Senate. Looking at the Safe Banking Act, the States Act, the Claim Act, and the MORE Act. Of those, I think the Claim Act would have the most impact on the insurance industry. It specifically provides some safe harbor for insurers looking to participate in this space. But again, yeah, to echo Randy and Rich's comments, there's not a lot of hope that either one of these will be championed by either of the current platforms of the presidential candidates. We're really looking at whether or not there's going to be a change in leadership in the Senate and a continued Democratic lead in the House for there even to be considered discussion on the Senate floor and a vote.
And actually, if I could just pick up on something that Phil just said. I think a few weeks ago, there has been in place, as you guys know, an amendment to the federal budget since 2013 that, prohibits the DOJ from, spending federal funding to prosecute medical marijuana transactions that are in compliance with the state law in the states in which, those businesses are operating. A couple of weeks ago in the House, and last year as well, the House passed a bill that expanded that to include all legal marijuana transactions, both medical and recreational. So, to pick up on Phil's point, if we see a change in Congress, you may see something more along those lines, like a half measure, and then whether or not a prohibition against spending federal funding to prosecute transactions involving recreational marijuana may or may not depend on whether or not the Congress has sufficient votes to override a veto.
Yeah, good point. So, I think certainly a political shift is going to impact cannabis at the federal level. But what are we seeing now, and what will we be seeing in the near future at the state level?
I can lead off on that. So there's two paths to state legalization. There's ballot initiatives and then legislation. And just a refresher, there's only 23 states that allow citizen-initiated ballot initiatives. So the majority of states require actually legislative action in order to create a ballot question or legalize cannabis. Leading into 2020, there were over a dozen states that were considering ballot initiatives, and now we're looking at less than half that, about 5 states that could legalize this November, 5 adult use and 3 medical. I realize that's more than 7. I'll explain in a minute. So Arizona is considering an adult use option. Mississippi has 2 medical ballot questions. Montana has 2 recreational ballot questions. New Jersey has an adult use question, and then South Dakota has competing medical and adult use ballot questions, which is actually the first state to consider both lines of legalization at the same time. But thanks to COVID, or not thanks to COVID, we're seeing suspended or failed ballot initiatives in Florida, Idaho, North Dakota, Missouri, Oklahoma, Nebraska, and Arkansas. Nebraska, actually just recently, there was a Supreme Court decision that took the approved ballot initiative off the ballot due to some technicalities. And then on the other side of that, there's the actual legislative approach. In 2020, there were dozens of cannabis policy reform bills that were introduced, even in states that had previously been vehemently opposed to legalization or decriminalization. And a large number of those bills seemed really, primed for passage. That is, of course, until COVID hit, and many legislatures were forced to convene early, and the bills were postponed or effectively killed. So Alabama and Kentucky had two medical cannabis bills that looked like they were going to pass, but then they were derailed. And Connecticut also had a governor-sponsored bill that was eventually killed because of the premature legislative adjournment. There are a handful that did manage to squeeze by, including most notably Virginia, which decriminalized cannabis this past May, a big step for a previously red state. And then Vermont, there were two separate bills passed by the state Senate and House to finally legalize and regulate sales, which is notable because Vermont actually legalized cannabis use 2 years ago. So it took them that long to actually create a cannabis market.
And to piggyback off that, Phil, I think any sort of initiative being considered or much less passing is obviously very strong progress in terms of the sort of journey towards 50-state legalization. But I think it's really important to consider what the actual bills are doing in any given state because it drastically affects the market size. So, for example, Illinois only had about 100,000 medical cannabis patients prior to the adult use bill taking effect on Jan 1 of this year, which is obviously a far cry from the millions of adults that can now walk into a dispensary legally. At the same time, the licensing structure in Illinois is very limited compared to other states. For example, Oklahoma, which has some of the more liberal licensing. And what that does is constrain supply, it increases prices. And if we're determining how big the market is and how large the resulting insurance opportunity is, I think it's really important to take a look at the exact proposals in each effort because they can absolutely drastically affect the size of the industry.
Interesting. Randy, any thoughts?
Yeah, I think Phil and Rich covered it. Just from a 10,000 foot view, I think what's going to be interesting is to see how these states implement, if any of the ballot initiatives are successful, how they implement the statutes and the regulations. I think there's obviously here in Illinois an intersection between the legalization and the racial justice component, the social justice component of the statutes. And, given everything that's happened in the news this summer around that, it's going to be interesting to see whether other states pick that up and how that plays into the licensing requirements.
Yeah, for sure. I think I'll be keeping an eye on that. And I think we also could all agree it's definitely going to be an interesting next few months, probably even more interesting next 4 years. But shifting our focus to the reason we're conducting this webinar over Zoom, let me ask about the pandemic effect, whether perceived or real on the cannabis industry. I'm hearing conflicting reports about the impact of COVID-19 on cannabis businesses. Some sources are predicting massive losses. Others are reporting record-breaking consumer demand and sales. Each of you has a unique perspective. So what are you seeing, and how do you reconcile the inconsistent reporting?
I'd be happy to kick that off again. I think my outlook for the cannabis industry remains very positive, despite the scattered reports and predictions to the contrary. I think the numbers are largely in at this point, and evidence suggests that the market is resilient and worthy of that essential business designation bestowed upon it by many states in the early months of the pandemic. I think some of the early concerns and reasons for negative predictions were based primarily on uncertainty for COVID-19 and the pandemic in general, but then also predictions that Americans would somehow switch from a legal market to the illicit market as budgets tightened. But I think what we saw actually was that analysis failed to account for, one, the trust that many consumers now have in the cannabis market. There's a lot of regulation and a lot of quality assurance in legalized cannabis, And so that, while there's still scattered reports of tainted products or, bud tenders licking joints, that kind of thing, there is still a very solid consistency with the cannabis products being produced, where not so much on the illicit market. Also, excuse me, I think large groups of Americans just don't have access to the illicit market like it might be anticipated. So it's kind of a leap to just assume that everyone's going to switch as soon as their budgets dry up. Also, there have been reports of people switching from recreational to medical to avoid the higher taxes and receive priority for purchases as supply was an issue in the early days of cannabis, of the coronavirus. And then also there was a little bit of hoarding behavior. Cannabis was seen as this essential commodity to have, similar to toilet paper for many Americans. So I think the early predictions just failed to account for all of that.
I can jump in too. I think that maybe some of what the disparity relates to is a little bit of the capital crunch, and smaller businesses are getting caught in the federal illegality versus being named essential businesses by the states. And so what you're seeing, I think, is some of those smaller entities who are having financial difficulties, and that's making it easier for some of the larger players to come in maybe and take them over, or for those smaller entities to go out of business. So I think maybe you are seeing a contraction of the market in some respects.
Interesting. Rich?
Yeah, no, I agree with everything that's been said. I think we're certainly seeing the uncertainty take effect in terms of a bit of a slowdown in investment. But overall, I don't think the cannabis industry has been harmed nearly as much as other businesses. Speaking on the insurance side, one implication that we're seeing, businesses may be a little bit less protected going forward in terms of their business income. Seen a couple of markets that are specific to cannabis pare back or remove that offering altogether. Others are adding, very specific COVID-19 or disease exclusions. So that could be a sort of residual effect going forward, but there hasn't been a total withdrawal of insurance capacity from that coverage. So I think the damage will be fairly minimal as long as brokers and their clients take a proactive approach.
Yeah, actually, that's a nice transition there. Mentioning insurance, one of our favorite topics at AAIS. It's really been well established, or at least I think so, that there is no silver bullet when it comes down to structuring cannabis insurance programs. Can each of you speak to what you think is often overlooked with respect to insurance coverage, of course, and how the different types of cannabis operations in the distribution chain lends itself to one coverage or another? And Rich, I'll kind of let you kick that one off.
Absolutely. Well, I think in the cannabis industry, the insurance products very, very clearly follow sort of the pattern of you get what you pay for. And I think many cannabis businesses, unless you have a dedicated risk manager with experience in other industries, you're in growth mode. And insurance is a box that you need to check to make sure you can move on to what are more considered more pressing activities. So when that happens and you're really trying to check the box for the minimal premium amount, I think there are a lot of pitfalls you can run into. And some of the most common that I'd mention are your health hazard or specified disease exclusion on your product's liability policy. You certainly pay a lot more to have a policy that has a less restrictive endorsement like that. Certain other coverages that just are really difficult to obtain, spoilage for your products, product contamination, cyber, related to the collection of customer data in the dispensary. All of these things may be available in the marketplace, but I think are often overlooked when insurance is, sort of taking a backseat to other items to focus on during rapid expansion.
There's two items I think that I've been thinking about recently. One is bud tender liability, or more specifically, professional liability versus general liability. Your typical general liability policy provides coverage for all company operations, including the non-professional negligent acts of company employees. But there's no coverage for the rendering of or failure to render a professional service. And there are, decades of litigation concerning the scope of what is considered a professional service. While it generally doesn't mean product instructions or warnings, there is at least some argument that it includes specific recommendations or related to the treatment of a medical condition. So I think the question remains, where is that line between being a store clerk and being a canna pharmacist? I'm aware of at least one case not a case, but an issue in Colorado from 2018 where there was some concern over bud tenders making recommendations to consumers regarding the applications of cannabis to treat pregnancy-related morning sickness. And you can just see how that would snowball into all kinds of liability issues. The other issue that I've been thinking about, again, to echo Rich, is the cyber and data security risks. I just want to underscore that the cannabis industry is without a doubt just very profitable and flush with new and inexperienced businesses, and it's also a treasure trove of private data. So for these reasons, it's kind of a target for cybercrime, I think.
And I think the one place where I'm seeing a coverage gap is really on the hemp side, and not the marijuana side, and on the grower cultivator side. So hemp is legal, but they sort of still haven't gotten their arms entirely around how to regulate it. The USDA is regulating it now. There's an accepted level of THC, right, 0.3% by dry weight. It is hard for a grower or a cultivator to grow their crop and be able to guarantee that it's going to be under that threshold level. And if it exceeds the threshold, crop has to be destroyed. And as far as I am aware, there really is no coverage for that right now. Nobody's taking that on.
Yeah, interesting. And I heard professional liability mentioned, a bud tender in insurance, so to speak. One thing I've been hearing in the marketplace from a variety of sources, whether it's insureds or brokers like Rich, D&O, directors and officers, is increasingly hard to procure. Randy, do you have any feelings on why that's the case?
I think the emerging claims that you're seeing in this industry is on the D&O side. You're seeing, revenue projections. You're seeing sales projections, and I think shareholders are seizing on those comments and saying, "Well, you didn't make what you said you were going to make, so that's a D&O claim right there." And it's just it's a new place for plaintiff's counsel to play in that space, and so it's making it hard to get D&O coverage, and I think that's making it hard to get deals done to some extent.
Sure, Rich. I know being on the consulting side, that's an issue that you're facing when trying to offer a complete risk management solution for insureds. Any thoughts on the D&O issue?
No, I don't know that D&O is necessarily overlooked. I just think that most clients look at the price of it, and it is not stomachable. There are so few markets that are writing D&O coverage for cannabis risks, and again, like all the other coverages, very much follow the pattern of you get what you pay for. And to get any sort of decent coverage, it costs an arm and a leg. So unless you're a publicly traded company or maybe a large private with a lot of investors, I think you probably look at the price once and say, okay, I'll try again in a couple of years unless my exposures change.
Yeah, you mentioned a limited pool of carriers playing in the D&O market, or at least right now. But there's a relatively limited pool of carriers in the industry or offering any type of cannabis coverage for that matter. We see a lot of excess and surplus lines participants, frankly, 95% probably. But the market, some of the projections I've seen are upwards of $30 billion by 2025. Why isn't there as much enthusiasm given the market share Is it the stigma? Is it traditionally, insurance is a conservative industry? Is it just, frankly, an educational shortcoming? Randy, I'll go back to you on that question.
I mean, from my perspective, I think a lot of it has to do with just the continued federal illegality and the inability to predict where that's going to go. I think if you talk to a lot of the pricing actuaries, they say, well, I could price it. We're getting to a point in the market where I kind of have a sense of I can price it. I know what the exposures are. You can't really price for, the political outcome. So I think people are kind of in a wait and see mode.
Absolutely. To echo that, the number one reason that I hear from the larger admitted markets in the U.S. is the federal status. And I think many of them are absolutely aware of the opportunity and the potential for rapid growth, but may not be seeing enough of it now or consider it a large enough opportunity to risk running afoul of federal law. So I do think, like as we mentioned in the first question, something like safe banking, something that specifically names the insurance industry as being protected in serving cannabis risks, I think that'll go a very long way. And of course, then there are the challenges of rating, et cetera, when everything is excess and surplus now, and there's not really much available publicly. However, I do see the federal law as by far the primary driver of the lack of participation.
So we do a lot in this space. I mean, do you have any thoughts?
Yeah, I think I'd echo a lot of what Randy and Rich have said, just maybe state it differently. It's all kind of interrelated and all stems from that federal prohibition. There's the fear of reputational risks. There's yes, there is rapid growth, but sometimes that can even be scary by itself. There's the lack of public loss data, and then also a lack of specialized knowledge even within the insurance industry about, as we've discussed, there's these gaps and things that we didn't consider early on or maybe missing now as we create policies or try to adapt current policies to the market. And of course, there's also the lack of reinsurance participation, which it all flows from the top, so to speak. When reinsurers don't want to get into a space, that means that carriers are kind of constrained with their capacity.
Yeah, appetite and capacity, certainly an issue. Rich, I know that you dabble in reinsurance and work closely with some of your colleagues at Aon. Can you provide some insight on the landscape of the reinsurance market?
Yeah, absolutely. So, following the primary side, it is very, very limited. I'd say there are about 5 reinsurance companies that will actively entertain cannabis risks. And again, the primary driver there is the federal law. I do think when you get to the reinsurance side as well, there is a little bit more reputational risk being considered than on the primary side with much smaller pool of reinsurers. So I think that's a major driver as well, but really just an extremely limited landscape from top to bottom. And I think to add to sort of the previous comment, I think one thing I find really interesting is that markets that have gotten past the federal law, it seems that they're not really concerned with the underlying exposure of cannabis as much. For example, there are markets out there who do write cannabis risks, but not hemp risks. And they actually say because they like the increased regulatory scrutiny around the cannabis industry. And if we look at the operations of the cannabis industry, I don't think they're inherently that risky compared to many of the other industries these markets actively write insurance for. So it just continues to be the federal law kind of driving from top to bottom the lack of carrier participation, both on the reinsurance and primary side.
Yeah, I've heard that reinsurers when some of these entities or carriers are approaching reinsurers. Reinsurers want to see, well, call me in 5 years when I've got a better handle on pricing and claims. With two lawyers on the panel, can you talk to some of the issues around claims? Is it just the fact that there's not enough litigation to really start establishing trends, or is the industry just not mature enough? And Phil, thoughts?
Yeah, I think it's both of those things. The claims we have been seeing, the litigation surrounds nuisance issues and infighting between cannabis businesses. We're not seeing the large number of personal injury actions that we were initially anticipating seeing when cannabis was in its early legalization stages. And yeah, it's just I'll leave it there. Randy?
Yeah, I mean, I think that's right. I think, anytime you get into a new industry, right, it takes a certain amount of time for people to even understand what types of claims are going to come out of that industry. And I think, when cannabis industry sort of first got going, you kind of had it in your head, okay, there's going to be products liability claims, clearly. There's going to be crime, there's going to be cyber, but for example, the D&O claims that we've been talking about, I don't think anybody really anticipated those to the extent that they have begun to emerge. The professional liability claims that, Phil was talking about with the bud tenders and, if I recommend this particular product to you, what kind of a representation am I making, and in what capacity am I making that representation? I think these are things that people probably didn't think about initially, and so you're seeing the reinsurers kind of wait to have that be more developed before they stick their toes in a little deeper.
Yeah, no, I certainly agree, and I see we're approaching the conclusion of our segment, and of course we'll be engaging with our attendees. Hopefully there'll be some good questions, because I know there was a lot of really good content here. But before I conclude, I'd love each of you to talk about maybe high level something that we didn't cover. Or what is your individual organization doing in the industry that might be different from some of your competitors? Rich?
Sure. So I think that Aon is certainly one of the largest global brokerages that is actively serving cannabis clients in the U.S. Certainly a lot of competitors out there, but tends to be smaller, more localized, and I think that is an effect of the cannabis industry being smaller and more localized. There, obviously interstate commerce is highly restricted. There's not a lot of economy of scale, expanding across states, et cetera. So I think that's what really differentiates Aon is just the amount of resources that we have available and can bring to the industry. But at the same time, I think we are going to, like every other brokerage out there, sort of leave the clients wanting more because all of the products, as you mentioned at the beginning, Joe, there's really not a silver bullet available to the industry. There's such a lack of capacity. Placement is very, very difficult. And I think that's pretty true no matter where you are in the industry and what your operations look like, or even your size and scope. And just a closing thought to kind of leave with the audience here is the landscape is so limited that if you're an insurance carrier and considering getting into this space, there's definitely a niche for you to play in. There really is just a need for capacity on nearly every single product line, and even at rates that are significantly higher than other industries.
Completely agree. Randy, coming from a legal perspective, any parting thoughts, and is your firm doing or differentiating itself in the market space?
Yeah, I mean, Porter Wright, we have a cannabis practice. It's really obviously a multidisciplinary practice. There are a lot of different areas of the law that come into play. And I think we've got a good group of people together to kind of give a holistic view of, the risks and that kind of stuff. I would say, from an insurance perspective, I obviously work a lot with the insurance industry, and, what I think clients need to be mindful of is we've talked a lot about the federal law and the uncertainty of federal law. And I talked a lot about the fact that even in the states where cannabis is legal, the regulatory regimes are constantly evolving at this point. And so, when you're looking at it from an operational perspective, I think, you sort of never want to enter into an area that you operationally can't handle. And right now, I would say there is a lot of space to play, like Rich is saying, but you also want to make sure you don't get your systems and your processes so entrenched that you can't adjust to what's happening in the states or at the federal level.
Yeah, and I'll echo. I don't want to steal Phil's thunder, but I will echo that there is plenty of space to play. And if carriers are considering delving into the market, there's some unique opportunities. But Phil.
Yeah, I just want to underscore that. States are going to continue to push forward with legalization and regulation, regardless of what the federal government does. You can't unexplode the cannabis industry at this point. And I think the fact that fact, taken together with the fact that the cannabis industry has not been as negatively impacted by the pandemic as we initially anticipated, and most states actually appears to be booming. And also the fact that the insurance industry has and will continue to be itself negatively impacted by the pandemic. It seems like cannabis is really shaping up to be an attractive opportunity, or a lifeline really for some carriers, as we continue to move past potentially the phobias of reputational risk and federal uncertainty and complexities of state-specific regs. I think cannabis insurance is an underrated niche and is particularly ripe maybe now more than ever for increased carrier participation.
Totally agree, Phil. It's a rare growth opportunity in today's marketplace.
Yeah, I think all four of us can certainly agree on that point. And with that being said, thank you to the panel. We're sticking around to answer any questions. So looking forward to some dialogue with our attendees. I'm happy to welcome back our panel of experts for a Q&A session. Hello again, everyone. And I would like to just remind the audience to submit your questions using the form just below the screen, and we'll pose them to our panel live. And we already have some great questions. And Randy, I'll start off with you. The question being posed is, what is either being done or needs to be done regarding the black market undermining the owners who are conducting all the necessary testing, et cetera? It seems that the illegal operations get away with murder, and the legal operations are getting hit by laws and regulations.
Yeah, this is a great question, and this is obviously a problem that they've been having out in California too, which was the first admitted market. I think a couple things need to be done. I think that the insurance departments need to recognize that this is an issue for admitted markets, for E&S markets who are writing in the space, and they need to give those markets the flexibility to address their ratings and their pricing. And I think, honestly, the carriers who wanna get into the space have to think about dealing not just with the Department of Insurance, but sort of interdisciplinary with the governments to see what they can do to resolve the problem and to work together to do something.
Excellent. Rich?
Yeah, I totally agree. And I think the black market is a huge challenge because there's economic incentive to participate in the black market still. California is a great example where there are very, very high taxes on recreational or medical legal marijuana. and very high regulations. So as long as there's sort of that incentive for consumers to continue accessing the black market, I think they're going to. So, unfortunately, I don't really think it's on the legal market at the moment to really do anything to become competitive with the black market. It's the lack of competition in many states that's sort of driven by the state regulations themselves. And until we see, some of those loosen, less taxes, less regulation that makes things expensive and burdensome, I think we'll continue to see a black market. And that being said, there is a lot of enforcement action. In all legal states, the police are out there taking down illegal grows. We see it every year in Mendo in California. I know also Weed Maps, for example, was pressured by the state a bit to remove some of the unlicensed dispensaries from their platforms. So there is enforcement action, but I don't think that's ever really going to tackle the issue, which is sort of the uncompetitiveness in many states of the legal market.
Phil, I know that you've spoken to this point, and certainly it's part of the Cannabis rules and regulations and abiding by those rules and regs. What are your thoughts?
Yeah, this is just one of those growing pains that we talk about all the time in the cannabis industry. There's so many things that need to be worked out as every state begins to create a legalized market. And one of the things we see time and time again in a newly legalized market is a sudden rise and then a gradual fall of the illicit products and sales as law enforcement is able to reprioritize and re-strategize, and consumers become also more comfortable with the market. So I think there's no one answer to what's going to make the illicit market go away or diminish to a point that it's not a problem to the legal market. It's a lot of different things. It's consumer trust in the particular market. It's eventually open commerce, allowing states to ship cannabis across state lines to meet market demands and so forth. Access to dispensaries and product in states that have legalized. There's still plenty of counties within those states that say they don't want to participate, or in some states, as I mentioned earlier, Vermont, legalized but then didn't have a legalized market. And then of course, law enforcement prioritization. I think as all of those things come and meet each other, you'll start to see the illicit market go away as the market matures and so forth, and the consumer base increases and so on.
So the second question, actually really interesting because we are seeing a lot of non-traditional insurance vehicles enter the market space, captives. But this question is specifically, do you see any risk retention groups being formed to deal with some of the capacity issues? Randi, are you seeing some of these non-traditional insurance vehicles being formed?
I have not, other than captives. I think that's the way that a lot of people have decided to go, but I don't know if maybe Rich has seen anything.
I'm familiar with one that I believe was established in March, CLIC Risk Retention Group. I know it's aimed at the cannabis industry, I believe general and products liability. I have not spoken personally to any clients who subscribe to it or have accessed it. So I'm not really sure exactly what the underlying mechanics look like. But I would expect to see more of those, as well as alternative risk transfer mechanisms developing over the next couple of years as the industry grows and matures.
Right.
Yeah. Phil, go ahead.
Oh, I was going to say, we've spoken with a couple of potential AAIS members who, and one who became a member they're interested in starting up or establishing risk retention groups. I think it's a great idea for niche markets within the cannabis insurance space.
Yeah, just to conclude on that question, I mean, we have spoken really with a variety of different entity types. Because of the capacity issue, people are looking to get creative in order to start writing insurance policies for the industry. So moving along here, if cannabis becomes legalized at the federal level, will standard policy forms and endorsements be adequate to provide coverage? Phil, I'll let you speak to that.
Well, it's still going to be a niche market. I've said that a couple of times so far in the presentation. It's, it's got unique considerations to it and some unique risks. It does mirror a lot of the markets that the specialty markets that we currently have in the insurance industry. So I think there's still going to be a need for specialized forms, at least specialized endorsements, to address some of these issues and, speak to compliance with state regulations and so forth. What really catches my attention about this issue is the potential for regulators become more selective, or at least scrutinize cannabis exclusion filings if cannabis becomes legalized at a federal level. I think there's still room for those exclusions, absolutely, but there need to be more tailored to the actual coverages being provided, not just kind of blanket exclusions on cannabis property or cannabis activities. Very much like I think they'll look a lot like liquor liability if legalized.
Randy or Rich, any commentary?
Yeah, I totally agree, Phil. I think that's exactly right. The one thing I'd say is I do think many of the specialized coverages, so to speak, and not really coverages, more exclusions that we're seeing in the policy. The reason these policies are so complex is because of all of these exclusions that are tacked on. Not seeing a lot of enhancements or anything that is really specifically designed to provide a coverage for the cannabis industry that's unique. I think some of the exceptions there would be like the bud tender's liability that you referred to. But I would expect at least the policies to get a bit more simpler with some of those exclusions removed as things become federally legal, carriers get more comfortable, but completely agree that there is going to remain sort of a unique exposure in the cannabis industry.
Yeah, for sure. So this is a question that we get oftentimes. So we talk about entering the market space, or insurers entering the market space. I think people are looking for maybe a softer point of entrance. Randy, would CBD or underwriting CBD or hemp exposures be a good starting point?
Well, I think I made this point in the presentation. I think hemp and CBD is almost more difficult to some extent, just because of the nature of the regulations, and the USDA is regulating it, and and for growers and cultivators, it's rough in terms of what the product's going to look like. I almost think cannabis is in some respects easier to deal with because you sort of know what it looks like going in based on the federal illegality. I don't know if Rich and Phil have more to add on that.
Yeah, I would echo that, absolutely. I think it depends on the market, which state you're talking about. But what we've seen over the past few years, is a lack of direction from the FDA with respect to CBD. It's a really tricky market. There's lots of questions that still need to be answered there, and hemp as well. Whereas cannabis, depending on the market again, is remarkably secure and buttressed by robust regulations and barriers to entry to ensure that companies remain stable and compliant and risk aware. And so I would argue that a licensed cannabis company, is a much better insured than an unlicensed CBD company.
So this is a good question to conclude with. Is federal prosecution a legitimate concern for those that want to participate in the marketplace? Phil, I know you have a few thoughts on this issue.
Sure. Yeah, we get this question a lot. Talking about our Cannabop with potential parties. Is it a legitimate concern? Yes, but is it realistic? I'd say not so much. There have been carriers serving the cannabis space in one form or another for over a decade, and not one of them that I'm aware of has been prosecuted by the federal government or ordered to stop issuing policies. I think there is some opinion that cannabis insurance actually protects consumers. Insurance actually, provides that backstop for product liability, bodily injury lawsuits. So it's a plus to the industry, and the federal government isn't deaf to that. They're not going to come after the insurers. They're going to come after people that aren't following the state guidelines.
Randy, as the other attorney on the panel, I'll leave you with your final thoughts on that question.
Yeah, I mean, like Phil says, is it a legitimate concern? It absolutely is a legitimate concern, and unless and until there's legalization, it's going to remain a legitimate concern. I think that the appetite for enforcement, or at least what DOJ says is their appetite for enforcement, has sort of fluctuated over a period of time, depending on who's in office. But right now, it looks like the DOJ is maybe focusing a little bit more on the cannabis industry, but not from an insurance perspective. I mean, the enforcement has taken place in the antitrust capacity more right now. So, so I think I would echo what Phil said. I mean, you're not seeing it. What they say and what they have done are kind of two different things.
Yeah, absolutely. And it looks like we're approaching time here. So, great conversations being had here, and great questions. Thank you to the audience for tuning in. So with that, thank you all. And it looks like at the top of the hour, we'll explore another growing exposure, particularly as we cope with COVID-19 cybercrime. Our own Linda Jancic will welcome a panel of leading experts from Berkeley Re and CyberScout. If you're working at home, you'll certainly want to listen in. So thanks.
Thanks, everyone.